Okay, everybody. Welcome, everybody. Let me open this up. Alright. How's everybody doing? I'm sure it's only one person who's watching. That's me. It's okay. I know that most of you will be watching it, later on. And usually, I'm just here, filling space, wasting time, and chilling, right? So today is Friday, the 5th of January, and I don't have any set, topic or anything like that. I'm just gonna hanging out here for a little while, and of course, kind of reporting on the price action here for a little bit. That's usually how I start my video. It's just to get me kind of, the juice flowing, so to speak. But so hopefully everybody has a great week so far, and entering the weekend and whatnot is going to be amazing year for the economy. No, I don't know about the economy. That you see a lot of shenanigans happening in the job reports and all that stuff. So I was watching a whole bunch of YouTube personnel, and I'm hoping to show you some of that as well. Maybe we could to kind of extrapolate the data from their video and all that stuff too. I mean, the content, obviously, the job data that came out was always like they have the revision, right? I think George Gammon had it on his show. Hold on, let me see. Which one did I watch just now? Not that one. That one is a good one too. But which one was the one I watched? Let me go to his channel here. And there was a live one. I think this one and also this one. So, but anyway. I'll show you guys that one later. Alright, so let's get to GameStop price point right here. Kind of doing nothing much here, of course, kind of to be expected. Usually, volume died down every time, earnings kind of subsided, right? Of course, again, I think the volume will come back eventually. People are going to become more enthusiastic about it when we start posting positive earnings and making money. And of course, if the stock price is going down while the price going up, sorry, let me rephrase that. If the fundamental of the company keep going up and up and up, and the stock price going down and down, that's actually an opportunity for you to buy more. And this is why, averaging down is very important, because on this type of company anyway, if you believe in the company the long term, you're gonna see a whole bunch of people who would want you to kind of doubt this company, right? And leadership and all that stuff as well. But Brian Cohen is very valuable, the valuable type personality that Wall Street actually love. And so it's a matter of time that they're gonna switch their tune in some way, some shape or form, right? It's just like how they were negative about Tesla 10 years ago, but now all of them are pumping it and saying it's the greatest thing that you should own. They're able to do this, they're able to do that, and kind of are sympathetic towards Tesla. I'm not saying Tesla is not a great company, you guys. I'm just saying that, at the current moment, with the economy that we have, with the interest rate that we have, it's just difficult for people to own anything right now at the moment. So, that's going to be affected by a whole bunch of stuff. The amount of money that you have to spend in the economy is going to be less and less. And then also too, you have a lot of data that came out that is kind of very concerning, right? About the banking system and all that stuff. All of it is kind of like, it's been all about concerning, but for some reason the stock market still keep going up, right? We know there are some manipulation. Maybe there's more manipulation than we originally thought, but nonetheless, it still has that, that icky feely thingy that we usually have. So let's look at the price real quick first before we go into all of that. But anyway, let's do that real quick. So we have right here, price of GameStop right now is $15.96. Sorry, $15.96. What we are seeing here is a weekly close, weekly candle. But if you do a daily, so the momentum has been dying down a little bit. But our what is this? The put to call oscillator. So right now there's more put than call, and so again, when it builds up like that, I think this is more call than put. More call than put. I think the red one is put. Alright. So I'm trying to see the correlation between that. Like, so if I see that there is see that line right there, whenever you have a more put to call ratio, you see the price spike right afterward, right? Not spike, but run up, right? When you are betting against as low as you bet against right here, and then you see the price kind of surge a little bit the next day, right? And then it comes right back down. Is that really accurate? Rather than the RSI, if you look at the RSI too, right at this moment right here. So if you see down, from down over here, up. So that's usually a diversion, and that's what you see that price right there. Usually it should peak a little bit over here, but maybe, there's a price downturn, low volume, they could manipulate it in anywhere. But again, it's really hard to predict all of this using, the chart, because again, it could be manipulated, and then it's like if you could control the price of the stock due to whatever liquidity market maker is able to trade against the security anyway. And so they're gonna, try to win as much as possible. And so again, like these call options and put options are usually, there for the liquidity of market makers. So unless you are buying the stock, holding it, and, enjoy the long-term perspective of the company, you're not going to win out the market maker, because you're going to be at the whims of the fluctuation of prices at will. And, you could make money. I'm not saying you can't, but if you are wrong on the direction, sometimes even right on the direction, you still lose money if you use option, call, or puts or whatever to bet on the direction of the stock. So just be careful. I'm not discourage anyone who wants to get in to option trading or anything like that, because if you're good at what you do, you probably could make a lot of money doing that. But just make sure you know what you're doing. You don't want to bet anything that you can't lose, so to speak. But and again, again, me having the experience in Bitcoin, I kind of understand the value of holding it for the long term as well. So let's talk Bitcoin a little bit, because again, since I'm here already, it seems like it's been bouncing back again. Perhaps it's on that news, saying that Bitcoin is going to get approved, ETFs coming and all that stuff, right? Of course, that will initially bring the price up a little bit, but I don't think it's going to be by much at this moment. It might spike and then just immediately dumping down. I'm looking for $50,000 or $48,000 price level, right? So maybe 10% more than what it is today. I don't know how long that's gonna be like, or how long it's gonna stay like this level, or that 10% up from what I expect it to be. Honestly, again, there's nobody could predict the price of anything, right? You could only get a feel of it based on the network of the Bitcoin, or the Bitcoin network, or the popularity of Bitcoin so far, and the fact that the news media has been talking about it. It's usually a red flag, right? If they want you to buy into it, that means usually the opposite. Again, I said usually because, again, you kind of manipulate it. They could keep the price high, as high as they can. Possibly manipulate the Bitcoin because they have the supply, because they have the spot ETF. Spot ETF is what they're trying to achieve, but actually right now you could do a future ETF, meaning the derivative and all that stuff, and probably you could do option as well. That's just what I've heard, but that's neither here nor there. But for some reason you can't buy the actual Bitcoin yet through the law. So again, I don't know what they are waiting for. Maybe because maybe the SEC, they're clashing, who should be in control of Bitcoin, so to speak. But it's coming. The technology is no longer could be ignored. It's a matter of time at this moment to do. Anyway. Hello everybody, just one of you just joined just now. Welcome. Nothing here. I'm just like gonna go through the price action and kind of like go through X here. Of course, people are still pumping AMC here. Makes no sense there. And of course, the Bed Bath & Beyond people, and if you watch this I guess the space call or whatever, Kai's, Malaj, and all that people, they are fighting each other, and it's just ridiculous, these people. I don't know, again, it's a very distracted thing to have to happen to GameStop. Again, they chase the clouds and all that stuff, chase the wrong stock, right? But then use GameStop's name and Ryan Cohen to kind of, make up their theory and all that stuff. Which is, if it's all fun and game and just entertainment, that's fine. But again, like if you encourage people to buy into a company that Ryan Cohen is never in, and was interested in it. The fact that the media keep bringing it up too, as if like, it was the failure of Ryan Cohen that the company went bankrupt. It wasn't. The company was already on the road for bankruptcy before Ryan Cohen even got involved. People don't remember, or people tend, or I should say, the media tend to not always give you the whole truth. Sometimes they withhold the truth for a reason, and you have to understand why they withhold the truth from you. If you follow the whole Bed Bath & Beyond story, watch Moran's and all that stuff, and you understand it much more, then I would be able to explain to you But for briefly though, I think Brian Cohen got in because he wanted to change. He wanted to change this type of mentality of overpaid executive and just, there to collect shareholder value, right, from the public. And then do a backdoor deal with the private equity in order to get them more money on the bonus aspect of things, right? So if you get people to sit on the boards will most likely to vote for the raise of the CEO and all that stuff. So it's kind of a symbiotic relationship between these people, but then the people that left out in the cold is usually the public. People who hold the shares. It's detrimental to your portfolio over the year, and the 401k and all that stuff, right? If you're not aware of stuff like this, remember too, like Bed Bath and Beyond used to be in the S&P 500, right? And in its heyday, but then I'm sure it will get, like, any time there is a drop of sale or whatever due to the private equity angle, where they have people come in and just load on debt, overextend themselves, borrow as much as they can borrow to over leverage the asset of the company, and then of course in the process making themselves money, right? Hand over fist due to the loan that the company was getting, and of course the loan is also being set up by their network of companies that they would encourage themselves to do the same thing type thing. Why? Because I'm sure the bank makes their money, makes their cut, the executive make their cut, and the private equity makes their cut too when the company gonna go under soon, right? And in the meantime, of course, the public is not aware of this, and then they wonder why. Why would a multi-billion dollars retail store be closed? Like, it used to be the American brand, right? Bed Bath & Beyond. Why is it closing? It makes no sense. Shouldn't they make billions of dollars? Kohl's the same way. I bet you anything it's going to be closed down in a minute, right? Of course, it's due to Moran's too that I kind of know about Kohl's, because again, like, he do all this research for people to at least realize what's going on. Elena, thank you for joining. Appreciate you. But so as far as like Bitcoin goes, I think it's one of those things where you have to wait and see what the news is actually true. ETF, I don't know even if it's approved tomorrow, today, or whatever, Monday. It really doesn't mean that they're gonna buy Bitcoin right away. I think they're gonna have to set up a whole bunch of stuff first before they could even do that particular thing. So let's look into Gamestop page real quick, just to see what's going on here. So right off the bat, obviously I'm looking at the page for Twitter or X right here for GameStop. They have been advertising like crazy. They're trying to hit that bottom line or beat the expectation for Q4, and I have no doubt that they're gonna do that this quarter or this year even, because if you watch my live stream yesterday, and here's like a couple games that are popular among people, among gamers who wants to kind of continue their their quest, so to speak, right? Playing games. And so they will be ordering these type of things, and it's gonna hit the bottom line too if they do pre-order for Q4. Again, this month is still Q4, so. And then you have these type of things like you save 75% on gaming or on a game, so to speak. They have a PlayStation PC winter sale right here, and so you could get good games, highly engaging games for a very cheap price here. If you were to look at that, let me see here. Yes, so was it this one or this one? But it's on PC, right? Hold on a minute. Let me see. PC game. Okay, I think. So that was yesterday that they have that deal. So it seems like today's deal is not there. Yeah, you have to catch it when they offer you a deal. You have to catch it on time or they're not gonna give you any more deals. So today, I don't see any more deals happening. Every games are in full price right now. All sorts of game for people to enjoy here. Yeah. So currently, but they have a clearance here. So $8 for Fallout. Not sure what this. Guess like a shooting zombie or something like that. Okay, and then let's go back to this. January 4th, they have their gaming community right here. Kind of encouraging people, to be aware of the new games lined up coming. Again, I mean, leadership, has been kind of using this platform to advertise, No need to spend money on actress or actors or anything like that to try to get you to buy into the game. So these are like the new games that are in the lineup right here. I think I was showing it a couple days ago on my live stream too. Skull and Bones. It's a very popular game. Okay, let's see. And then Final Fantasy. This is like kind of I don't know, anime type of gaming. Infinity Wealth, not quite sure what that is. Never played this game before, but yeah, it looks fun. You like kind of fight each other. And most of these are I bet you anything, it's online interactive type thing. I'm still waiting for Jimmy to go back to $10 a share. Okay, well, good luck. I hope it will be. Super Mario, people love this type of game. It's just fun to kind of play. Destiny 2. All sorts of game that is going to come for this new year. Yeah, so currently not much deals going on here. As far as like if you want to search for deals, you could just go to that tab, right? And then you have this like get 50% off. There you go. That's the deal right there. That's pretty good. So you have to like go to a specific tab for that. But anyway, enough about GameStop. Let's talk about SoFi a little bit. Of course, they have like one of those downgrade a couple days ago right here. And that's why you see all that drop. I'm sure it's going to continue to drop. But, people coming out with their videos saying how Wall Street is wrong about SoFi and whatever. But for some reason, they're right about GameStop, right? There's a lot of YouTuber that come out and talk about SoFi much more often now. So that's what, one of the red flag that I got from that. Not to say that SoFi is a terrible company to own though. Full disclosure, I do have shares of SoFi and I did sell some covered call and my share did get recalled, which is fine, completely fine for me because again, it's one of those things, you have to trade that stock, in my opinion, so far so good. I'm gonna continue to watch this company though, but I don't believe in it's like, it's gonna cost this massive amount of momentum, so to speak. Maybe because if they beat earnings, which I feel like they could because the bar is pretty low to beat. $200 million more than it used to be. Remember, I thought it was like lower. No, not 200. Hold on. Right here. So it was 443 reported at the time. 443. So now they want it to be 572. So, hey, if they are able to beat earnings, and it seems like it's already January 29. So perhaps they're setting it up for retail to buy into this again, enthusiastic about buying call options. And I've seen one video where they're advocating for leap calls and stuff. I don't know. I mean, I think it's risky, in my opinion, to do leap call. Why not just own the share outright? If you believe in the company in the long run, why are you advocating people owning a contract, right? I understand that people are trying to say like, oh, you could really, for a little amount of money, you could hold half of the share or whatever, right? Or you could spend half of the money in order to control, 100% of the 100%. Sorry. So for every contract is 100 shares. So if you buy Leap's call or whatever, it just means that you are for sure thinking that this company is going to go higher from where you are buying. So for example, if that company is trading right now at 822 and you think that in a year this company is going to go to, I don't know, $15 or whatever, you buy a call at $15, long dated in a year from now, and it may be like a dollar or two per share though. So with that, you have to spend $100, right? But then you get the control of 100 shares of SoFi. But the problem with that is if you're not right, you're not even owning that share. So that $100, you might lose that $100 in a year if it doesn't hit that price point, right? And worse, if it still hit that price point, you might be losing that money anyway, because yes, if it's above that price point, you could buy it, but you lose that $100 that you spent on that contract. So technically, you're still losing. And then to buy into that shares, you have to, have money available to buy that 100 shares worth at $15. So I hope that makes sense. But it makes more sense if I write it down, but I think it's just too risky for me to even advocate for that, in my opinion. But again, like in my opinion, if you want to buy into the company, shares is the best way. And if you think that the company or support the company in any way, buying shares is actually better than buy call. Buying call, you're just like betting that your money that the company's gonna go to whatever price you think it is. So and then they also advocate for the in the money call option too, meaning that they want you to buy Leap option at $7 a strike price. So that contract is going to be a lot higher than the $15 one. So in a lot more expensive, so to speak, I should say. But I don't know, usually people do this type of thing at earnings time and they just sell that contract quickly, right? They don't actually want to hold the whole year worth of contract. They just want that quick return, So again, like it's suspicious to me that they, pumping SoFi and all that stuff. And, the same narrative as GameStop. Now, I know it's understandable. Why? Because look, they are reporting earnings, and in their mind, the company is doing well. You know, the revenue went higher, but look, last quarter they just didn't beat expectation at all, so they miss pretty substantial, right? So what is that? I mean, think about it. They miss the quarter, but the stock price goes up anyway. But they beat top line revenue. So, you know, again, like, they love top line revenue being higher, but for some reason the earnings per share went down by 200 points or 200% and more. And look, the stock goes up, right? So these analysts, obviously, they only care about the top line revenue, and they have no qualms about the actual earnings per share. It's pretty comical, to say the least. But it should be the opposite, right? Because earnings per share is actually much more important than the top line revenue, in my opinion, anyway, you know, based on my analysis of things. Alright, guys, I feel like I'm babbling too much. So let's get to the meat and potato of this show here. Why you're in here in the first place. Now, this is Warren Kitty. This is the guy who started all. And in this video right here, he is telling you 5 reasons. Okay, GameStop is a roach, not a cigar butt. A roach. So it's a term, right, that Warren Buffett usually use, is to find a company that is about to go under, right, and to sell off the asset in order to get that, you know, last few puff from the cigar butt, right? That's what he means by a cigar butt. So again, it's just a story or a advice that Warren Buffett has said multiple times in his, you know, annual earnings call and stuff like that. He's always referring to try to find companies that you know, about to go under, and then, you know, not to take it public or anything like that, in the hopes of selling those assets for a profit, right? And of course, it's gonna to the tune of hundreds of millions of dollars or even billions of dollars, right? Perhaps it has still a few puff left before, you know, it's being liquidated and so forth. But so in this one, Warren Kitty didn't agree with that. He thinks it's a roach. So let's listen in. I don't know if I'm going to play the whole thing, but I might. Oh, what's happening here? Oh, sorry.
And then just moves on. But it's more than that. Yes, the legacy business is up against some very real secular risks, and the new consoles coming out this year might be the company's last hurrah. But this isn't some horse and buggy shit. GameStop is an established, uniquely...
So this one is 3 years ago, before I kind of let it play. August 4th, 2020. So I think I marked that date already right here. Keep in mind, you know, when he made that video, it was right here. So he found it at the very bottom. Okay, keep in mind, this is how value investors are doing it. They find stocks that is severely undervalued at the time, and in my opinion, it still is undervalued. You know why? Because when he was talking about GameStop at that time, GameStop is actually very, very indebted, right? Doesn't have the leadership that it has today. So the company was in worse shape than it ever was before back then. Okay, so currently we have a better company moving forward.
Position player in a thriving $150 billion gaming industry. And this is why GameStop is different. Its final puff is a legitimate opportunity to reinvent itself as a premier gaming hub. Many investors assume GameStop will be forced to close its doors within a couple of years, so they're only focused on how much free cash flow this console cycle will bring in. It's a reasonable point of view, but it's incomplete. Investors also need to consider whether GameStop can opportunistically leverage the console cycle to transform into a more sustainable gaming-related business. And that, like, GameStop isn't a cigar butt. It's more of a roach, right? That last hit might not be the prettiest or the cleanest, but it could get the job done, if you know what I mean. It could get those creative juices flowing too, right? Over the next year, GameStop's new management team could uncover ways to engage its 60 million Power Up Rewards members and attract new customers to a more experiential type store. Are they likely to pull it off? I don't know. It could go either way. But so far, it kind of seems like they're on the right track. And when you consider what their balance sheet will look like 12 months from now, the opportunity is there. In my view, it's just a matter of execution. Fortunately, from the security analyst point of view, at a market cap of 260 million and an enterprise value of about 100 million, the downside is limited. Following major write-downs and balance sheet repair, their financial situation is pretty solid given the circumstances, with a reasonably fair net asset value of about 400 million. They just closed.
So net asset value about 400 million. He said that, right? What is net asset right now for 400 million at the time? Excuse me. I'm kind of yawning right now. I'm sorry. Okay. So he said net asset. So I think what he mean is net cash. 400 million. So now it's 500 and so about 200 million more than it was, right? If that's what he mean by net asset. But let's listen in. But let me try. I'm gonna take a step back, but I'll let the video play.
Q2, which will be another rough one. But following that, I expect earnings to improve significantly. Based on GameStop's market share, continued demand for its products, and management's improved cost management, there's a very good chance the company remains free cash flow positive over the next few years, which adds to the safety net. But let's also consider the upside, right? Over the next 18 months, GameStop could generate enough free cash flow to pay off its debt, exhaust its buyback authorization, and still have an adequate financial foundation to continue pursuing new revenue streams. These could include in-store gaming experiences and partnering up with vendors to showcase games. I'm willing to bet Reggie has a number of good ideas on this front. What's also interesting about GameStop is that it trades so cheaply and it's so heavily shorted that all that may be needed to revalue its stock is a shift in sentiment. Right now, the stock is pricing in the most bearish of bearish outcomes: imminent obsolescence and management impotence. But GameStop is the only brick-and-mortar store dedicated to gaming. Suppose over the next year, management can craft a narrative that carves out a 2% share of that rapidly growing $150 billion gaming industry, one of the most exciting spaces in the tech landscape, a narrative that highlights an experiential niche backed by the biggest names in gaming. What then? Such a sentiment shift could take time, but I don't know. There's so many unusual factors with GameStop that I could see it happening rapidly. In summary of the summary, I'm just a security analyst in search of asymmetric upside. If it isn't clear, I'm not betting that GameStop is going to stage the most epic turnaround of all time. I'm just betting on three things. Number one, it's highly unlikely GameStop's equity is worth less than $250 million. Number two, GameStop's legacy business is probably worth between $500 million and $1.5 billion. And number three, there's a non-zero chance that GameStop successfully reinvents itself. And that's it for the summary. I'm curious to hear your takes on GameStop as well, so definitely share it with me in the comments of this video, or on Twitter, or during the live stream, or wherever, and then we can compare our line of thinking. All right, let's explore the different elements of the GameStop thesis a bit further. Now, if you've seen the other videos on my channel, if you've tuned into the live stream, you know I like to keep these walkthroughs light, so feel free to grab a beer. Although if you've been long GameStop over the past year, you probably already have one, because how else are you going to get through this position? I'm kidding. So first, let's just discuss why GameStop is the first video of this Kitty Corner series, and that's because it is now the largest position in the Roaring Kitty portfolio. If you've seen my other videos, you may have seen that I was already long GameStop, but over the past month of July, it's been trading below $4 per share, and as I dive deeper and deeper, it's looking increasingly compelling to me, so if the market's kind of forced my hand, I've just been adding more shares, and it's actually twice as large as the next position in the Roaring Kitty portfolio anyway, so I thought I'd share my analysis. Maybe you can poke some holes in my thesis or catch some of my blind spots, but let's keep going. Let's start with some recommended reading. So if you want to learn more about the GameStop opportunity, first, I strongly recommend you check out Scion's letters to the board of directors over the past year. Scion, that's obviously a big short berries firm, right? They've had a position in GameStop for quite a while, and they've been sending letters to the board and to management, kind of expressing their views on how GameStop should handle its current situation. And earlier this year, Scion filed a 13D because they took a 5% position, and within that 13D, you can see all the letters compiled into a single location, so that makes it super convenient. These are press releases too, though, so you can just do some Google searches to check them out. Scion's latest commentary on GameStop was from a press release issued in early June. We can see they were still a 4% owner of GameStop at that time, and they were expressing their views on the board vote that was coming up in June. And so check this out, because it's their latest line of thinking. They do such a great job of boiling the thesis down and their thoughts to just a few succinct, very clear paragraphs, and I really appreciate their line of thinking. So this is a great starting point. Another item you're going to want to check out is this Restore GameStop presentation. This was published in May 2020 by Hesta and Permit, two hedge funds that own about 7% of GameStop right now. And they published this because they were the ones vying for those board seats in June, and they did get them. But this is like an 80-page presentation. I mean, how much can I add to an 80-page presentation? Not much, right? But it's super thorough and comprehensive. It's an excellent starting point for learning more about the background background of GameStop as a business model, but also what its future could look like, and just from a general security analysis standpoint. Now, there have been so many articles written about GameStop over the years, countless, right? I'm losing track of everything, but there's a handful of them I definitely recommend checking out if you want to learn more about the GameStop opportunity. The first two are pretty similar. It's this one by Games Industry Biz and this one by IGN. They were published in February, March of this year. But what they're discussing in these articles are those concept stores GameStop was testing out in Tulsa, and they include quotes and interviews with the GameStop executives. So I don't exactly know what GameStop could look like, what their future business model could look like, but these articles kind of cover these things. You can get some insights into what's going through management's head. So definitely check these articles out. And another one is this article by Scott Preston of Maven Group. It was published in Barron's in February of this year. He approaches it from a somewhat similar perspective, where he's covering what GameStop could do in the future, different ways they could approach their current situation, but he approaches it from more of a security analysis standpoint. So like, all right, here's what the business model could look like. Is there an investment opportunity here? And he does a great job of covering all these items, much better than I could. So I really appreciate this article. It's one of the best, most comprehensive security analysis articles out there on GameStop. So a must read. And just generally, I mean, seeking.
Sorry. I know. You guys probably like encroaching that. Alright. Entrench. Sorry. I'm eating. I shouldn't be eating. So I was looking at right here, the price point right there, right? $4.19. $4.19 back then is actually 4 times that. So what is 4.19, right, times 4, because that was before the split. So that price target right there of that recent price, which is the price that was traded at the time, was actually $16 today. Wait, sorry. The other, the opposite, actually. It's actually division. It's the opposite, you guys. I'm sorry. So back then, that price target right there of $4 is actually $1 and something cents. So if you want to verify that, that's why I have it right there. So that's the day in which he, right there. So $1.04, right there. So just keep in mind, it's a different price point. $4 then, it's not the same as $4 now. Okay. $4 now, it would have been up here somewhere. Right here. Okay. So let's go back. And what's he saying about, the articles that was written back then? Of course, they have different, point of view for this particular company. And, this is how the free market should act. That you have positive article versus negative articles, and you have battles between the two. And if the investor, kind of, resonate with either one, that's how the battle would be winning, based on who gets to benefit from, whatever the bet that's happened. But I think, nowadays they don't even have any good, anything good to say. No publication is willing to give, GameStop a fair shot. Meaning, don't even want to cover it in a good light, right? It's only Ryan Cohen is failure. It's only GameStop is done. It never make any profit. All of that BS, right? It makes no sense, right? Perhaps they just don't want anyone to talk about it, and because it's a very touchy subject for these people.
Most comprehensive security analysis articles out there on GameStop, so a must read. And just generally, I mean, Seeking Alpha, many times you'll be analyzing a company to check out Seeking Alpha because you want to see what other people are saying about it. And sometimes there's just not any articles published, or the ones that are published suck. And I gotta say, there's a ton on GameStop, and many of them are very good. I'm really impressed. And I'm biased, but in my opinion, the bullish ones are, the bullish authors, they seem to be much more aligned with reality than the bearish ones. That's just my take. Maybe you disagree. I feel like the bulls are much more security analysis types, and the bears are more maybe just focused on industry, headwinds, and so forth. So just my take. Let me know if you disagree. The next item I want to touch on is the whole cigar butt angle. Many people, when they're talking about GameStop, they describe it as a cigar butt, and they go, that's not for me, and they just move on. And there's definitely some truth to that, but I actually think GameStop's a little bit different than than the traditional cigar butt that most people think about. And here I have up a PDF from tilsonfunds.com. This apparently is a talk that Buffett gave to MBA students at Florida University in 1998. And in here, he describes the traditional view of cigar butts. They got one last puff, maybe one last round of free cash flows, but thereafter, there's nothing more to be made. Either the business model is no longer relevant or the industry is dying and so forth. But this is where I think GameStop's a little bit different, because this isn't just some horse and buggy industry, right? This is a thriving, rapidly growing gaming industry. And here I have an article from newzoo.com, where they talk about the size of the market. They estimate over $150 billion this year, rapidly growing to over $200 billion in just a couple of years. And so this is what I mean. The backdrop here is very promising for a company like GameStop. But this begs two questions, right? The first is, does a sustainable niche for a company like GameStop even exist? And the second is, if it does exist, is it possible or likely that GameStop can transform into a business model that actively grows alongside the industry? And the truth is, I don't know. But with this new management team and the new board of directors, at the very least, it kind of seems like they have the vision, and soon they're going to have the balance sheet to subsidize that vision. And this brings me to my next point, is that this console refresh is a tremendous opportunity for GameStop to reinvent itself for two reasons, right? The first, most obvious one, is that the increased gaming demand will bring in more free cash flows, right? That's an important component of any investment thesis. But these increased free cash flows will give GameStop the flexibility it needs to potentially reinvent itself. And the second aspect is testing. They can leverage the increased...
Sorry. So increase in free cash flow, what he means by that is, so back then, I bet you anything they probably have a lot less free cash flow than today. Where's free cash flow? Right here. So currently we have $100 million, right? A year before we have negative $400 million. So that's a $500 million swing of free cash flow. Meaning that a year from now, we're going to have a $500 million more, okay, if the trend is still the same. And so that is not a, something that people are telling you. This leadership hasn't been doing anything, right? How is this not doing anything? Like, how can you improve from negative $400 million in free cash flow to now positive $100 million in a year? Right? Now, if you go back to the previous year, even before that, 2 years ago, it's negative 200. So even if from this price point in 2 years, they're actually in the positive $300 million, right? So if you want to give them like a lower estimate, you could say, okay, so they make $150 million in free cash flow in 2 years. I mean, for the last 2 years for every year, right? So if you want to think of it that way, that's a low ball. Instead of looking at this high number right here, from here to here, that's 500 million, right? But if you look at from this reference standpoint, 2 years ago, it's $300 million swing to the positive in 2 years. So again, this is how you kind of analyze based on the year on year, right? And 2 years is better than 1 year, right? In terms of data point. So that's why you just average it out. If you want to do the over 2 year time span, then GameStop was able to be, $150 million cash flow positive every single year. And if you want to divide that by a quarter, then divide that by 4. So that's how you do the trend, right? And it's trending in the right direction. For some reason, they don't want to tell you that they're trending in the right direction. They're only interested in hyping you up that the company is going under. Ryan Cohen doesn't know what he's doing. GameStop is only selling the physical game, and the digital download is more rampant, even though they don't even do their own research, right? And you have the Yahoo guy who misreporting it, by miles. They're reporting the 9-month quarter loss versus the whole year, and that's a theme right there. And anyone who have a YouTube platform, large like the Bow Tie Nation guy, you know, who's been actually pumping other stock right here. You know, I just watched his video recently. I was actually doing the research on those stocks that he pumped, and you know, it's ridiculous. But anyway, and so those type of news was actually rampant over there back then as well, 3 years ago, right? And just like he was saying, it's like most of the negative stuff that was written, it was just like BS, right? But the people that are, you know, grounded in reality, like looking at the number and kind of the trend, yes, it was kind of challenging, but you know, it could be transformative. This is the opportunity to have a new business model right here, right? And then, you know, downside protection and all that stuff. And again, management up until that point, it was 3 years ago, keep mind you, now they're better than ever. They are better than ever it ever been. But next quarter and then the next year, the next decades after this is going to be the ride of your lifetime, right? But anyway, I'm not gonna play the whole thing. I'm gonna link the video down below so that you could enjoy it in your own time. Now let's get to the job data. I'm gonna be out soon, you guys. Regardless of what people say, it's still a great company. Yes, I agree. Hi Lynn, what's up? Haven't seen you in a while. Thank you for joining. So I've been here for a little while. I'm kind of getting a bit tired at the moment. Try to eat my pizza right here. So let's get to the job data, right? It was kind of ridiculous at the things that was being said there. But I was watching Rebel Capital List here, and he has good information like graphics and stuff like that. And I'm sure, you know, I think Lynn watched him as well, right? I'm not quite sure if you've seen this one video already, but it just talks about how, you know, the ridiculousness of reporting the data initially, and then they would do a revision, and usually it's down. It's like it's much less than what they say it is. So for example, they're saying right now that there's 250, is it 1,000? Yeah, 216,000 jobs being, you know, added to the economy, right? But then time and time again, back in July right here, they were revising. So the green in the middle right there is the revision, and then they have a revision of the revision. So the revision of the revision is actually even lower than the actual revision. I hope you catch my drift right here. Again, it's like it's to manipulate the data. Initially, the reason why they do that is to not freak the market out, right? And that's why the markets keep going up and up, just as if to say that, oh, higher job data is a lot better than lower, right? But you've seen actually like those jobs was actually all government job, right? And government job has its kind of seasonal. They could end your contract at any moment notice, right? So they don't actually, you know, kind of produce anything in the economy. It's unproductive in a sense. But the real job was actually 1.5 million jobs was lost so far. I think, who had that video that I saw? Hold on, not that one. So, hold on, let's listen to him for a little bit here. While I'm looking for the other one.
Then we go from 339 down to 281. We go from 209 to 105. A decrease of 50%, for heaven's sakes. And that was June of 23. Down by 50. So I'm coming out with these videos and reporting just on the revisions. We're not even talking about the revisions of the revisions. Well, I guess in October we were. I mentioned that this morning. So, I mean, it's not just June. Look at this. Well, here's when they actually had a month where they probably thought people were catching on to the ruse. So they did, so they did it the opposite direction. But here, 187, 165, 336 down to 262. And what we were talking about earlier, 150 all the way down to 105. And look, people completely ignore the revision, let alone the revision to the revision. It's all just pushing a narrative, for heaven's sakes. What's so frustrating is that people just don't care, or they don't even pick up on it. And this isn't it. Let's keep going here. So, believe it or not, Zero Hedge then says that's just the start. So this chart, that's just the start of the revisions that they picked up for this article. The household survey, which, as you guys know from watching my videos, we've got the establishment survey. That's where they just count the number of jobs that were created. But the household breaks it down by person. So if one person is like the Jamaican family on In Living Color, where they have 45 jobs, it actually just picks that up as one additional person working, where the establishment number would calculate that as 45 new jobs. But it's just the Jamaicans from the In Living Color skit. So if you look at this survey, the number of employed workers actually collapsed by an unprecedented 683,000. Okay, so I'm reading this for the very first time, as you can probably tell. 683,000, the biggest drop since the U.S. economy was shut down by the cerveza sickness. How is this not headline news? So here is what a chart of that looks like. This is going back to the cerveza sickness, this gold dotted arrow. Wow. They say even scarier, while the monthly grind higher in payroll numbers provided by the less accurate establishment survey means that U.S. job hit recovery hit a record high month with bizarre consistency. And in December, this was certainly the case. Yeah, you know, it's almost like, what's that saying? There's no straight lines in nature, something like that. So when you see a straight line, you almost know that it's man-made. It's like the same thing with data, right? There is no perfect, just linear motion in data or linear direction. So when you see one, it's kind of a head scratcher. Not kind of. All right. So yeah, here's where, and look at how just perfect this line goes up. And then look at the payrolls relative to the employment, right? Here's, wow. Another just staggering chart from Zero Hedge. I want to give them a massive hat tip for this. Full-time jobs, monthly change. Again, the worst since the cerveza sickness.
So that 1.5 million job was a full-time job being lost. Yeah, so I'm just gonna play that little clips there, but if you want to watch the whole video, I could link down below here. But I saw another one right here, kind of, talk about the same thing along the same line. And these gentlemen are very, I feel like they are a good source of information. I trust them. But again, do your own research. I just resonate with their way of delivery more. That's why, I tend to watch them. And what they say is kind of like makes sense to me. They're not pushing you to do anything either way.
And there's a couple other folks on Twitter that are catching on to this, and slowly this stuff is starting to come through. You're seeing it in FinX. I have to stop saying Twitter. It's X. I'm probably upsetting Elon with my off-brand nomenclature. This was so bad, guys. And here's a good one. This is Frog Capital, at Frog News on Twitter. This guy runs a really good feed, and he is lightning fast with these jobs reports. I've seen a lot of his stuff. He looks at a lot of the same data points that I look at, and he posted this image today. Let me just read the tweet first. He says, the BLS, Bureau of Labor Statistics, says you must look at both jobs reports to get an accurate picture of the labor market. The blue line is the household survey. The red line is the establishment survey. Biggest drop in the blue line, the household, since COVID. And look at these numbers over here. All right. Now, for most of the earlier years of this decade, you see how blue and red, they never line up, right? There's always a big gap between the two. I get that. But you notice, at least directionally, they tend to move in tandem. And then all of a sudden, spring of 2022, look at how the deviation between the blue and the red just explodes. Look at the gap heading in opposite directions half the time. I don't know what happened in April of 2022, but we made a big change to the way we count people working. And ever since then, the data has been garbage. And now it's worse than it's ever been. Just add up the difference between the blue line way down here.
I'm sure, they changed probably the definition of what a full-time employee is or something like that, right? And those type of things. Remember when they changed the definition of a recession or something like that? They said, oh, it's not a recession because this is how you should define this recession. I don't remember if you remember all of that stuff, but, it was comical at that at that point. And I'm sure, it's the current administration right now. I know, like, I hate to be partisan here, but I just think that, none of them are that, looking out for the little people over here. But anyway, let me get off of my soapbox here.
And the red line way up here. It's just, it's unbelievable. We're going from a net loss of about 700,000 and change on the number of people working in the household survey to a net gain of 216,000 in the establishment survey. How do you explain a gap of almost 1 million in the data point?
Yeah.
2 data points that are supposed to be measuring almost the same thing. How do you explain such a big gap in this? You can't. It is not explainable. Somebody needs to look into this, guys. This is getting really bad. It's bordering on criminality at this point. It's getting so bad, and there's so much money is moving around based on this data. The accuracy of the data is so important. It's so important. And right now, I can only assume political bias is the reason for this. Maybe there's a better explanation for it. Maybe work from home has skewed one report versus the other, and that's why all the downward revisions. But one thing is for sure, the revision history is all to the benefit of the people in power. And it shouldn't, the error should not always be in the same direction to the benefit of the same people. If it was a true error, it would swing in both directions from time to time, and that's not the case. Every month, they revise it lower. Bad things happening in these jobs report, guys. All right, I want to switch gears a little bit here, and I want to talk about my man, Danny DeHeck here.
He's just promoting. But yeah, I'll link down below the whole video of all 3 that I just shown. And yeah, not much there. 1 hour, you guys. 1 hour. Thank you. Lionel says in Living Color was okay. Living Color is a great show. I saw the episode. Oh, okay. That's cool. Yeah, not much there. So I will end the video. I might do a pre-recorded video tomorrow. I don't know. I don't know if I'm gonna go live tomorrow. We'll see. But yeah, I appreciate everyone who joined in just now. I know Lynn just joined in. Lionel, of course, and then a couple of other of you. So